Good morning and welcome back to the Monday Morning Market Recap, brought to you by Island Park Private Wealth. I'm James Sheehan, CEO and Managing Director here at Island Park. As we do on the first Monday of every month, instead of just recapping last week, we're stepping back to give you a recap of July and our outlook for the month ahead. So here's our recap of July and our outlook for the month of August. Let's start with the headline. Stocks fell for a second straight month in July. The S&P 500 was down about 2%, but that hides what was really happening underneath. The pain was concentrated in technology and semiconductors, which had led the market all year and then reversed hard. The Philadelphia Semiconductor Index surged over 100% in the first half of the year, then fell more than 20% in July, officially entering a bear market. What changed? Investors stopped rewarding companies simply for spending on AI and started scrutinizing whether that spending actually pays off. Alphabet's earnings were a good example. Strong cloud numbers, but raised capex guidance and negative free cash flow spooked investors. Alphabet spooked investors with raised capex. Reports that NVIDIA was weighing massive financing guarantees for OpenAI added to concerns about circular financing the AI trade. The bar has clearly moved from beat the estimate to prove the spending generates returns. At the same time, the US-Iran conflict re-escalated, sending oil back above $100 a barrel before a late-month ceasefire headline knocked it back down. That whiplash is why we expect oil and inflation expectations to stay volatile heading into August. On the Fed, they held rates steady for a fifth straight meeting, but three officials dissented in favor of a hike. This was the most hawkish dissent count since 2016. The market now prices in a hike in September and another in early 2027. A less guidance-driven Fed is making policy harder to predict meeting to meeting. The good news, earnings remain very strong. We're about halfway through Q2 reporting. Blended earnings growth is tracking near plus 40%, the best since 2021, with over 85% of companies beating estimates. The catch is expectations are so high that even strong beats have struggled to hold their gains once investors start picking apart guidance. On the economy, growth is solid but softening at the edges. GDP slowed to plus 1, 5% in Q2 from plus 2, 1% in Q1. The labor market has improved after a rough patch late last year, though hiring has cooled. Consumer spending is holding up even as confidence stays weak, and housing remains the clear laggard amid energy-driven mortgage pressure. So here's our outlook for August. Two big questions are driving everything. First, is this AI and semiconductor pullback the first real crack, or a healthy reset within a longer bull trend? Second, does the oil inflation Fed risk keep building or fade? We don't expect either to resolve quickly. Our base case is volatility stays elevated, with plenty of rotation beneath the surface. If AI stabilizes and tensions ease, inflation cools, pressure comes off the Fed, and the market's already improving breadth can carry it higher. If the AI sell-off spreads and oil stays elevated, the Fed could be forced into a hike that weighs on markets and the economy alike. For now, we're keeping portfolios positioned risk on, but leaning into quality. We remain overweight, US large cap growth and investment grade credit, neutral on small caps and international. We are cautious on high yield, where spreads leave very little cushion. We're also modestly overweight bond duration. Bottom line, August should tell us a lot about the market's ability to rebound. And we'll be watching the AI narrative and the Iran situation closely. That's our outlook for the month of August. As always, if you have questions about how any of this affects your portfolio or your plan, we're here for you. You can reach our team at 843-628-1173 or by email at info@islandparkpw.com. I'm James Sheehan with Island Park Private Wealth. Thanks for watching, and we'll see you next Monday.